Hello, welcome back to our channel. This is our next video in a series of videos for initial financial education or knowledge. We will continue today with uh, deeping diver on how stock prices are determined, what drives market dynamics, and how various elements like supply, demand, and external factors play a role. We will go over the stock pricing basics, factors that influence those, including company specific, economic specific, order types and their impacts on pricing, and bid-ask spread liquidity. And all of it we will go into demonstrating on practical example. Uh, let's start with the stock price. What is it? It is the valuation of a company single stock uh, determined by the market. And by market, we say classical supply demand principle. More people want to buy a stock than sell it, it means that the price goes up. Conversely, when people are willing to sell more than buying, the price goes down. Let's take Apple stock for a week. Uh, we can see here that there was a rather drastic decrease from 2.250 and 2.42 at the end, even 41.96. This means that there was some kind of factor because simultaneously at 9 a.m. in New York, this is Pacific time because I'm located in Pacific and Robinhood does show it on my timeline. So this means that some company factors have affected the stock, but in rather long-term planning, we can see that there are periods of increase and decrease, which means that uh, stock owners decided to sell it in this case, and people who have money but don't have stocks decided to buy it, like in here, which caused the price increase. But there is a small catch. The price isn't always the same as the value. There's a term named intrinsic value. This is the stock's true worth based on factors like revenue, assets, growth potential. While the market price is that what we see here is the one that buyers and sellers agree upon a given time, influenced by demand, news sentiment, and external factors. What are the factors that influence stock prices? Company specific. When a company reports higher than expected earnings, the stock price often rises due to increased demand. Similarly, a scandal or a failure in a software, in this case, or in case of Apple or any other technological company, stock price going down, means that stock owners will decide to drop the stocks. Let's check if we have any reports on January the 2nd or earnings. Nope, we can see no earnings here, which means that the January 2nd drop of price came from other reasons. Next potential affecting instrument is economic indicator, like interest rate rise, which makes the borrowing expensive for companies, which is reducing profitability and which is affecting on company report and so lowering the stock prices. Third category of impacting events are global ones, like political instability. On January 2nd, that also wasn't the case. nothing changed politically in the United States, which could affect the Apple stock going down. And the fourth one, and sometimes the most important one, it's investor sentiment. Emotions play a huge role. Fear often causes panic selling, while greed can lead to overvaluation. January the 2nd, 5 a.m., I believe it was the first trading day after New Year, and sometimes after New Year, like when the celebrations are gone and the new work year has started, people are keen to go on negatively, on an emotional level, which, if you are an investor, can affect your holding. You wake up and decide that you don't want anymore hold Apple stocks, and you want to try your luck in some other segment of economy, like, I don't know, fuel or pharmaceutical or other energy, anything like that. With covering prices, let's move next to orders, types and their impact. When you want to buy order, you can see here limit order, stop loss order, stop limit, and trailing stop, recurring investment, others. Buy order, this is the market type, which means that you want to buy or sell at the price which is accurate right now, at this very moment. Next is the limit order, when you provide the maximum price that you are willing to pay for the stock. In this case, you will have also considering trading hours, what is the period of time while your order is going to be effective on. And the last is expiring, when you want your order to expire. So this order will be valid for over a certain amount of time. Third one is stop loss order, when it means that you are selling stock at a specific price. When it reaches a certain price, protecting against large losses. It doesn't go as the previous example, the limit order with the affecting market hours, but it has also an expiration. Here you can see limit order, the bid and ask. There is a difference between them, which called a spread. Bid-ask spread. Smaller spread means higher liquidity. In this case, we can see that the spread is 1 cent, which is quite small, taking into account that the stock price is $240. This means that the asset is very higher liquidity, easier to buy, easier to sell, and there is always demand for it. Larger spread often occurs in less popular or thinly traded stocks, like if there is a gap. Let's check, I don't know, AA, for example. What is it? It's a, it's not what we wanted. ALN, is it also crypto? No, it's not. Limit order, we can see here the difference, despite the price is 2 times less than Apple price, but the gap is here 16 cents, which means that it has much less liquidity than the Apple stock. And let's see also the price movement to understand how the stock performs overall. Like in 3 months, we can see that the chart is green, so the end period was higher than the beginning period. But while for 1 month, we can see that 243.92 versus 241.86, which means the stock went down in 1 month time frame for $1. This Different gaps helps you to understand what is good and what is wrong with it. As the year has just begun, we can say that this year-to-date graph is not pretty accurate, and 3 months has more data, but for 1 year we can see that it's definitely growing stock. Around 30% gained from 182 to 242, so 1/3 or 60 points has been gained. I hope this was helpful for you. Thank you for staying tuned with us. Continue to watch our videos, comment it if you want, and of course like, share and subscribe to stay in touch and continue watching our informative sessions. Thank you. Bye bye.